Okay, picture this. You're thinking about solar, you're excited, right, about saving money, and then this financing offer lands in front of you. Seems simple enough,
Yeah, they often look pretty straightforward.
but hidden inside, there can be these little clauses, tricky bits, that could end up costing you, well, tens of thousands more over the years.
Turning a smart move into, yeah, like a 25-year trap, it happens.
Welcome to the deep dive, and this is Solar Scoop. Today, we're digging into exactly that, solar financing traps. And here's the thing, going solar, it's all about the savings, obviously. But how you pay for it, that might just be the biggest decision you make for actually getting those savings long term.
Absolutely. It's critical.
So our goal today, our mission, is to give you a kind of playbook, help you spot the real deals from the disasters waiting to happen.
Make sure that solar setup puts money in your pocket, not takes it out.
Exactly. We want you to avoid that situation where, you pay $180 a month for solar, but it only cuts your utility bill by maybe $120.
Yeah, that's just losing money every month. Guaranteed loss. And it's interesting, how the industry has gotten pretty good at making these offers sound amazing up front, but those traps are often hidden just below the surface. So let's break down the main ways people pay for solar. There are really three big ones.
Okay, let's get into it. Option one, the gold standard, maybe. Paying cash.
That's the one. It's the undisputed champion for savings, no question.
Right. If you've got the money, and importantly, it doesn't mean draining your emergency fund or anything risky like that.
Crucial point, yeah.
Then cash is fantastic. You get the quickest payback, highest ROI. You own it from day one.
And you get those tax credits directly back to you from the government. That's a big chunk of change.
Huge. So a typical system, maybe $25,000 after you break even in, say, 6, maybe 8 years. You could be looking at over $40,000 in just free electricity over the next couple of decades.
It's a great return.
But, like you hinted, that big if, it's a really bad idea if paying cash means you have no emergency savings left, or you end up putting it on high-interest credit cards.
Definitely don't do that. Which brings most people to option two, solar loans. Loans are super common, lots of zero-down offers out there. But, this is where the industry lays some of its most clever traps.
Okay, clever traps. Like what?
Well, trap number one is what I call the artificially low payment. They'll advertise this really attractive low monthly payment, but it's often just for the first 18 months.
Ah, the teaser rate.
Exactly. They figure that's how long it takes you to get your federal tax credit money. Then, bam, your payment can jump, sometimes 30, even 50% higher.
Wow. So it's designed just to look good initially.
Precisely. Makes the offer seem way more affordable than the long-term reality.
Okay, that's sneaky. Is there something even more costly to watch out for with loans?
Oh, yeah. The hidden dealer fee. This one is often the biggest, most expensive trap. Let me give you a real example. An installer might push their preferred lender's rate, say 2.9%.
Yeah.
Sounds great, right?
Better than maybe 4.5% from my local credit union, yeah.
You'd think so. But that better 2.9% rate often comes with a hefty dealer fee. Maybe $4,500, maybe more, baked right into your loan amount.
Wait, baked in, so I'm borrowing more money.
Exactly. It's basically a kickback the lender gives the installer, and you end up paying for it by financing a larger amount.
So the 4.5% loan from the credit union with no hidden fee?
Could actually save you thousands over the life of the loan because the principal amount you borrowed is just lower from the start.
That's incredible. Okay, so loans definitely need careful scrutiny. We're going to take a quick pause here, but don't go anywhere. We'll be right back to talk about the other big financing option, leases and PPAs.
All right, we're back. Let's talk about option three. Solar leases and power purchase agreements, PPAs. The sales pitch here is really tempting. It's often, hey, no money down, start saving immediately, we handle all the maintenance.
Sounds pretty hassle-free, right?
It does sound great, but here's the reality. You're not buying solar panels. You're basically just renting your roof to the solar company for 25 years.
Renting my roof. Okay.
And they don't always shout about this, but your monthly payment usually goes up every single year. There's often an annual escalator clause, maybe around 2.9%.
So wait, that $150 payment today?
Could easily become $250 a month 20 years down the line. Plus, you get zero tax benefits, zero equity. You never, ever own the system.
And I've heard horror stories about trying to sell your house with one of these. What happens there? That sounds like a nightmare.
It can be a major headache, seriously. When you go to sell, the new buyer has to qualify for and then agree to take over the remaining, say, 20 years of your lease contract.
Oof. I can see buyers balking at that.
They often do. It's a known issue that complicates sales, sometimes even kills the deal entirely. Or it forces you, the seller, to pay a huge buyout, maybe $15,000 or more, just to get rid of the lease so the house can sell. So the advice here is pretty clear, I think. If a lease or a PPA seems like your only way to go solar, maybe pause. It's often better to wait, work on improving your credit or financial situation rather than locking into a 25-year agreement that mostly benefits the solar company, not you.
Okay, that makes sense. So wrapping this all up, what's the playbook for success here? How do people make the smart choice? It really boils down to one core idea, doesn't it? Ownership is power.
That's the key takeaway.
So for most people, the best bet is probably getting a loan, but getting it independently, like from your own local bank or credit union.
Right. That way you avoid those hidden dealer fees and you get clear, transparent terms. You know exactly what you're signing up for.
So let's recap the best path. Number one, can you pay cash without putting yourself at risk? If yes, great, probably do that.
Best option if feasible.
If not, number two, can you qualify for a decent loan from your own bank or credit union? That's likely your best move. Get pre-approved before you start getting solar quotes.
Yes, get pre-approved first. Huge advantage.
And if neither of those work, then number three is probably hit pause. Focus on improving your finances before you commit to solar. And definitely steer clear of those leases and PPAs.
Avoid the rental trap if at all possible.
And always compare the actual numbers from multiple quotes. Get super clear on interest rates, the total now finance, any dealer fees, any lease escalators. See that true 25-year cost.
Know the full picture.
Because that financing choice, that's what decides if solar is a brilliant investment for you or, well, a 25-year mistake. But now, you know how to tell the difference. And hey, if you want some personalized help navigating all this, make the process smoother, you can connect with the Integrate Sun team. They can help guide you through it.
So as you think about going solar, here's something to mull over. Beyond just the dollars and cents on a spreadsheet, how will you make sure this investment truly empowers your financial future in the long run?